Mr. Patel is is a very accomplished and a brilliant chartered accountant. He's a rank holder at the All India level and has been in private practice ever since he qualified in 1986. He did his articleship with one of the most reputed firms of that time, that is S.V. Katalia and Associates, and now currently he's a partner at Manohar Chaudhary and Associates. He has spent a large part of his professional career dealing with taxation matters, and in the past few years has focused on tax matters specifically related to the financial sector, that like FIIs, banks, mutual funds, qualified financial institutions, and also foreign portfolio investors. His core practice consists of tax planning, appeals, representations, and even IT issues. He is an independent director and member of the audit committee of the LIC Housing Finance, one of the largest housing finance companies in the country. He is also an independent director at B4U Television Network India and B4U Broadband India, and also the chairman of the audit committees of both these companies. Ameet takes a lot of interest
context of taxation implications of the demonetization scheme arises because of the reporting requirements. We all know that if we just go and put money into the bank, income tax department automatically doesn't come to know. There is a reporting system put in place already, which, as a result of which, the income tax department gets information. So the first part is dealing with the existing provisions, which were in force up to the midnight of 8th November. So we have the AIR, all of us are aware of the annual information return, sometimes we call it annual information report, etc., or the FTRA. So long back, to keep a watch on high value transactions undertaken by the taxpayers, the IT law has framed the concept of statement of financial transaction or reportable account, FTRA. Earlier it was known as AIR, the annual information return. And with the help of this particular statement, FTRA, AIR, whatever we call it, the department collects information on certain transactions, prescribed high value transactions undertaken by all the taxpayers in the country. So there is a long list of transactions which are there in the Rule 114E, which have to be reported by the concerned agencies or concerned institutions to the income tax department. So this was the position up to 8th November 2016. So banks and post offices were already reporting certain transactions to the income tax, automatically doesn't come to know. There is a reporting system put in place already, which, as a result of which, the income tax department gets information. So the first part is dealing with the existing provisions, which were in force up to the midnight of 8th November. So we have the AIR, all of us are aware of the annual information return, sometimes we call it annual information report, etc., or the FTRA. So long back, to keep a watch on high value transactions undertaken by the taxpayers, the IT law has framed the concept of statement of financial transaction or reportable account, FTRA. Earlier it was known as AIR, the annual information return. And with the help of this particular statement, FTRA, AIR, whatever we call it, the department collects information on certain transactions, prescribed high value transactions undertaken by all the taxpayers in the country. So there is a long list of transactions which are there in the Rule 114E, which have to be reported by the concerned agencies or concerned institutions to the income tax department. So this was the position up to 8th November 2016. So banks and post offices were already reporting certain transactions to the income tax department as per 114E, Rule 114E. Now why banks and post offices are important is because, as we all are aware, in the context of the demonetization, people have been allowed to deposit cash with the banks or with the post offices. And therefore, we have to be aware that these two agencies are already reporting certain kinds of transactions. So if you see the table, whoever is able to see it, basically the table talks of, first column is the nature and the value of transactions, and the last column talks about which class of persons have to report. So payments made in cash for purchase of bank drafts or pay orders or banker's check of an amount aggregating to 10 lakhs or more in a particular financial year is one type of transaction. Second is payments made in cash aggregating to 10 lakh rupees or more during the financial year for purchase of prepaid instruments issued by the RBI. And third is cash deposits or cash withdrawals, including through bearer's check, aggregating to 50 lakh rupees or more in a financial year in or from one or more current accounts of the person. So these three kinds of withdrawals in cash aggregating to either 10 lakhs or more or 50 lakhs or more, depending on the category, were already being reported by a bank, including cooperative bank, to which the Banking Regulation Act applies. Then we have reporting by banks stroke post offices, banks or post offices, of cash deposits aggregating to 10 lakh rupees or more in a financial year in one or more accounts other than a current account or a time deposit. So, for example, savings account or a fixed deposit account, etc., other than a current account and a time deposit account, if the deposits, cash deposits aggregate to 10 lakhs or more, then the bank or the cooperative bank or the post office, Postmaster General, they were reporting these kind of transactions to the Income Tax Department in the AIR. Then banks or post offices, NBFCs, Nidhi, of course, 114E has lots of categories, but I'm looking at only those which are relevant for the purpose of our today's discussion. So one or more time deposits, other than a renewal of a deposit, aggregating to 10 lakh rupees or more in a financial year of a person, that is also being already reported by the bank or a post office or a Nidhi or an NBFC. So these were already being reported. Then you have the credit card companies, which some of them are the banks who are issuing credit cards. So they were reporting payments made by any person of an amount aggregating to 1 lakh rupees or more in cash, or if it is not in cash, then 10 lakh rupees or more, against bills raised in respect of one or more credit cards issued to that person in a financial year. So the banks, credit card companies were reporting all the cases where the credit card statement is paid by a person. If it is exceeding 1 lakh rupees, if it is paid in cash, then it was reported. If it is not paid in cash, then it was reported if the amount exceeded 10 lakh rupees. And this was per credit card. So a person having more than one credit card, if he was crossing the limits in each of them, both the credit card would be reported. And lastly, this amendment came recently, that tax auditees. So receipts of cash payment exceeding 2 lakh rupees against sales, against sale of goods, sale of services, etc., other than whatever else is specifically covered under Rule 114E. So wherever 44AB was applicable and the assessee got money from his debtors exceeding 2 lakh rupees for the sale of goods or sale of services, then that has also to be reported by the person who is subject to the tax audit. So these are some of the important reporting requirements which were already there up to 8th November. But apart from the AIR or the FTRA, all of us who are attending to scrutinies are aware that there is one more weapon in the hands of the Income Tax Department, and that is the CIB. So because CIB information, let's first see what is CIB. In 1975, the Income Tax Department formed the Central Information Branch of CIB for strengthening the tax database. And initially the CIB operated under the supervision of the Director General of Income Tax Investigation, and later on it has been brought under the Directorate of Income Tax Intelligence. since 2007. Why this is relevant? Because it may not be public knowledge, therefore I am sharing it, that in Bangalore there is a special team under DIT, intelligence, and that team looks at the data that comes to them through the CIB. And that data analysis is done on a massive scale. All of us need to be very careful about that, because many times, people try to play mischief. They try to create, multiple, and say for example, somebody opens a bank account with one branch of a particular bank, and in that name maybe, say for example, Tarun Ghia. In another branch, another account is opened, Ghia Tarun. Then in a third branch, it is opened as TM Ghia, and so on and so forth. Different permutations and combinations. Probably address may be also changed, and maybe PAN is not given. Now, many people feel that PAN is not given, so there is no problem. They will never be able to trace me. That is completely incorrect. The CIB team, the DIT intelligence team from Bangalore, has been analyzing huge amounts of data running into several terabytes, in size, and they have been able to detect several cases of tax evasion. All of us would have read probably in the newspaper a report some time back that 7 lakh non-filers have got notice. Means they had 7 lakh people had undertaken certain transactions or done something where the department feels that it is suspicious, and they have got notices for telling them that why have you not filed the income tax returns. So this is happening left, right and center, and we need to be very, very careful about this. That the taxpayer may try to be very smart, or rather the tax evader may try to be very smart, but the department is becoming extremely smarter day by day. So CIB is something that we need to be aware of. The key functions of the Directorate of Intelligence is widening of the tax base by identifying top filers and non-filers, deepening of the tax base by providing the information for the purpose of selection, proper selection of the scrutiny cases. And thirdly, through collection, collation of information from internal as well as external sources, and disseminating that information to the assessing officers and other users in the income tax department. So this department, DIT, collects information relating to financial transactions like investments, expenses, payment of taxes, etc., and details of persons who are involved in the specified activities. Their mandate also provides for identification and investigation of cases of tax evasion arising out of criminal matters, having any financial implication punishable under the direct tax laws. So CIB has got wide powers, it has got a wide scope. So the ITO has therefore two tools, and the AIR or the FTRA and the CIB. Now coming to the demonetization itself, and because that is the topic, hot topic of the day. On 8/11, all of us are aware that virtually the Prime Minister dropped a bombshell on the whole nation in his address to the the citizens of India, and the 500 and 1,000 rupee notes are no longer valid legal tender now. This obviously affects everybody in the country. So accepting the fact that everybody will have one or two or more such notes, the question arises, what is to be done now with these notes? If you want to, that is, or exchanging it for the new notes or the the lower denomination currency notes. So that is one aspect. The exchange of the notes or the depositing of the note, what to do with the notes. And the second part is the income tax implications. The income tax implications obviously will depend on the action taken as in respect of the depositing or the exchange of the notes. So I've tried to create a few scenarios that may exist. These are simple scenarios. There will be several more kinds of scenarios, particularly when you're talking about business entities or professional entities. So these scenarios and how to deal with them based on whatever has been announced by the Revenue Secretary or by the Finance Minister or Prime Minister in public domain, and in addition to the amendments which have already been made to the income tax rules. So scenario one, And this is very typical. And again, I am not suggesting any, modes of conversion of black money into white. This is pure and simple, clearly the legal part that I am dealing with, where a person, a housewife, or a senior citizen, or a retired person genuinely has cash on hand. So, in this kind of a case, deposit of cash, it has been announced that deposit of cash up to 2,50,000 in each account will not attract suspicion and inquiry. It will also not be reported to the income tax department. So we saw earlier that 114E talked about reporting by the bank when cash in excess of the limit is deposited into a bank account. So what the announcement was, and this is very interesting because on the first day when the announcement came, it was mentioned in order to give comfort to the common man that up to 2.5 lakhs, we will not inquire. You don't have to worry. This was the assurance given by the Prime Minister himself. So immediately thereafter, people have started. Those who are very brazen and sort of bindas about it, they have started depositing 2.5 lakhs exactly, 250 one account, mother's account, daughter's account, wife's account, minor son's account, etc., etc. We'll come to the point as to whether this is a sensible thing to do or not, and I'll tell you why I feel whatever views I have. But deposit of cash up to 2.5 lakhs will not attract suspicion or inquiry. It will not be reported also. This is a matter of fact because AIR does not require reporting if the cash deposit do not exceed 2,50,000. But the question that remains is, and this is the most important thing which we will have to sensitize our clients with, that does it mean that scrutiny will not come? Just because it is not reported, just because they have said that we will not suspect you or we will not inquire, does it really mean that scrutiny is not attracted? I have my doubts that in these kind of cases, there is a guarantee that scrutiny will not come. I don't think there is any guarantee given by anybody. Second scenario would be that any other kind of person, other than housewife, other than senior citizen, other than retired person, that person may have cash. Again, in that kind of situation, up to 2.5 lakh rupees deposited in cash in the bank account may not attract suspicion or inquiry. It will obviously not be reported also like all other cases. But again, the question arises that is there a guarantee that there will be no scrutiny? Third scenario, businessman or professional, which is mainly what we all are concerned with. There could be two subcategories, deposit of cash up to 10 lakhs and deposit of cash of 10 lakhs or more. So the first subcategory where deposit of cash, a businessman or a professional deposits cash up to 10 lakhs. There, I think we need to advise our clients that you need to take care that it has to be explainable. Just because it is not, it may not be reported. It is going to be reported because it is more than 2.5 lakhs. It will be reported, and you will have to explain it. Now, I don't know why at the time of announcement of this whole demonetization thing, they had said that if it is more than 10 lakhs and if you are not able to explain, we will add it and we will levy penalty, etc. So up to 10 lakhs, we have to ensure, the client has to ensure that he is in a position to explain it. Questions could be asked. Yesterday and day before, since day before evening, all of us have got on WhatsApp that famous notice in Sikkim, and that SSC has become extremely famous, that officer has also become famous. And we are seeing that the deposit was 4,51,000 in that case. Today there is another case where some deposit of 13 lakhs or something is there, 1351 or something. So even if it is 4,51,000, the department has already started sending, presuming that it is a genuine notice. And I have reason to believe that it is actually a genuine notice. But the information that the officer has got is not by way of AIR, because AIR reporting has not yet started, but through other means. So the question will be asked, and scrutiny will, in all probability, going to come. So where deposit is less than 10 lakhs, this could be the situation. Where the deposit is more than 10 lakhs, Obviously, again, explanation will have to be given. We will have to keep the cash books ready. The department will check lot of other aspects, etc. Scrutiny will according to me, 100% come where cash deposits of more than 10 lakhs are there. And if that amount does not match with the return income, with various other criteria that the department may adopt, then it is going to be added to the total income of the SSE. Now, if that amount is added to the income, then obviously it will be considered as tax evasion, under reporting of income, in which case tax plus interest and penalty under section 270A would obviously be then levied. And government is, this time the income tax department is not going to drag it on, They will straight away pass all the orders immediately, levy the penalty and start recovery proceedings. Unless, of course, it goes in appeal, they may, follow the due process of law and give, the abeyance of the demand, etc. But there is a strong reason to believe that all those provisions relating to, giving time to the SSE may get changed if the government is extremely serious about this matter. So we need to be careful about what happens in the future also. And if we need any proof that the government is serious about this particular aspect, about, going after the people who have deposited the cash, then one needs to only take a look at the online e-filing portal. Income Tax India efiling.gov.in. There is a section over there called compliance, and in that the last item is accounts with cash transactions. So this is already in place. Now some people have said that it was already there before 8 November. I don't know, I'm not very sure, because all of us, many of us had not really bothered to find out about this, We were not, a lot of people did not take the Prime Minister seriously when he, made threats at the time of IDS that either you come clean or afterwards you will face the consequences. So we don't know whether it was there before 8th or not, but today it is definitely there. So we need to be very clear, also explain to our clients that this is serious business. So now the question comes, what does one do with the cash on hand? So again, I have just tried to think of different possibilities. One is, there is a person who has cash on hand. So he has two options, either to deposit into the bank or not deposit into the bank. If he does not deposit into the bank, then it is a write-off, complete write-off, which is going to happen in the case of a lot of politicians and all other people who have huge amounts of black money and who will not be in a position to deposit all of it into the banks. That is going to be the write-off. That is the advantage that the government is looking out for, that how many lakh crores get written off because they have not been brought back into the system. But if it is deposited into the bank, then again there could be two options. One is that the SSE offers it to tax, and the other is, obviously, it is not offered to tax. Let's look at what happens if the SSE volunteers that income to tax. So what will happen is, for example, somebody goes and deposits 30 lakhs into the cash into the bank account, and he says that I will pay tax on it. He's got completely scared and he doesn't want to take any more chances. So he comes to you and says, I want to pay tax on it. So obviously we will recalculate the advance tax, which is payable in December. By December, all of us are aware, we have to, every SSE has to pay 75% of the total tax liability. So we'll calculate that, reduce what is already paid, and make that person pay the balance amount, so that 75% of the total tax liability is paid off. Then after 31st March, in March the balance tax will be paid. After 31st March, the return of income will be filed. Now in the return, what will he do? He will have to show it as income from other sources. So under the head income from other sources, there will be one item called other income, because there is not, obviously we are not going to be able to write the source. So the issue that arises over there is that if the source is not mentioned, then is that a problem for the taxpayer? We'll just come to that. But by doing this, the tax interest is already paid, so there is no problem on that front. Question that arises, as rightly pointed by Tarun Bhai, is that whether section 270A penalty can be levied. Now, the whole controversy arose in respect of 270A because of the announcement on the day one itself that if you deposit more than 10 lakhs, if you are not able to explain it, we will tax it and we will levy penalty at 200%. That was a loose statement made, and that is the result, that is the source of the controversy. After a study of the section itself, 270A, it appears that 270A cannot be, called upon by the officer in this kind of a case, because 278 talks of underreporting and underreporting of income. Now, if I have already reported the income, where is the question of underreporting? The only question could be whether there is a misreporting. So, if the assessee offers to tax that amount in the current year, and if the assessing officer accepts the explanation, he doesn't go further asking what is the source, and he says, "Okay, I'm not concerned. As long as you have paid tax on it, the government's objective is achieved." So then there is no problem. The question of penalty will also then not arise. But there is a possibility that the AO may not accept the explanation. So he may say that, "I know, what do you mean it is other source? You have to tell me from where you have got it, So in that situation, he may, again there are two subcategories, two different situations. He may accept the year of taxation, that AY 17-18 is the correct year. So he may accept that yes, it is income of this year. But there are further problems. Or he may say that no, this is not the year. This is actually not income of the current year, assessment year 17-18. So then what happens? So if he accepts the year, he will obviously tax it in the assessment year 2017-18. Tax is already paid. So he could either levy the penalty or not levy the penalty. So, again, we have to look at the alternatives, what happens. But if he does not accept the year in which the income is offered to tax, then obviously what he will do is therefore remove the income from the assessment year 17-18. So recalculate the income, recalculate the tax, and there will probably be a refund situation. They may give the refund also if they are very sure that they will be in a position to tax it in an earlier year. For that, he will then have to reopen the earlier assessment year or assessment years, depending on what information they have. This aspect is, according to me, very doubtful. It will be because then the onus will be on the ITO, on the assessing officer, to first of all make an allegation that this income is of assessment year, whatever, 12, 13, 14, 15, whatever it is. So he has to first do the hard work, find out which assessment year it belongs to, and then issue the notice and prove that the income belongs to that year. The other main category is where the assessee does not offer to tax. That situation, again, if it is picked up for scrutiny, the AO may either accept the explanation or not accept the explanation. Explanation will be what? It is out of my savings. A housewife will say, over the years I was, getting the household, that monthly withdrawals, I was saving on the side, and out of that I have put it back. Senior citizens will say, we had got some money over the years, I am 80 years old, obviously I'll have at least 2 lakhs lying with me, and I keep some emergency money for medicines, etc., medical expenses. These are typical examples of reasons that people are thinking of. These are genuine also. In some cases it may not be genuine, but these are the typical reasons that people will give. For minor children, the father will say, every Diwali, every birthday, you get small gifts, and they have now total up to 20 lakhs, and I put it, those kind of things are also happening. And if the assessing officer does not, if he accepts the explanation, obviously there is no problem, no tax, no interest, obviously no question of penalty. But if he does not accept the explanation, then again, according to me, the only alternative available to the AO will be to tax it in AY 17-18. If that happens, then the question of levy of penalty will obviously arise under 270A, capital A, and he will then initiate the penalty proceedings and take it forward. So the key question is that is it safe to show the cash as current year's income? Now on WhatsApp, we have already got so many, non-chartered accountants, newly qualified economists, who have started advising that, penalties, some are saying penalty is leviable, some are saying penalty is not leviable. A lot of former commissioners of income tax have also started becoming active on the WhatsApp, and their messages are coming, and all of them are saying, a long thing is there, but the bottom line is 270A cannot be applied. We have to decide whether that is correct or incorrect. So 270A is being referred to. That section talks of underreported income. So when the question, as I said earlier, when you offer it for tax, can it be said to be underreported or unreported or misreported income? There are a lot of complications over here, I feel. Will they or will they not levy or initiate penalty proceedings under 270A? It's a only time will tell. Every case is going to be different. Facts of each case will be looked at with a magnifying glass. The Shaktikanta Das, Mr. Hasmukh Adya have all clearly said that we will be analyzing the data. We will be seeing your history, current year's history as well as past history, and then we will take a call on what to do with the amount that is put into the bank, whether offered to tax or not offered to tax. So with current year's income, current year's books of accounts, current year's sales, etc., with earlier year's income, as I said, a lot of other factors will also be taken into consideration, like debtors aging. So somebody over the years, the typical time taken to recover money from debtors was say 5-6 months. And suddenly between 9th November and 30th December, his debtors have become zero. If that is the claim, they will analyze this and they will, then go into it. It may be possible, I'm not saying it is all illegal, but the onus will be on the assessee to prove that this is genuinely money received from the debtors. Debtors confirmations, 133 notices to the parties, etc., all will, in all probability, come. Then a lot of people are suddenly showing scrap sales. That I've sold scrap, 3 lakh rupees, 2 lakh rupees, 10 lakh rupees. Scrap sales attract TCS. So they will obviously then look at the TCS returns. Whether the TCS returns are filed later, payment is made later, all that will throw a light on the genuineness of the particular transaction. VAT returns, service tax returns obviously will be looked at. That have you, paid the service tax, paid the VAT, etc. Is it really current year's income? That is going to be the supreme question. The circumstances go against you, if your facts go against you, if your documents go against you, and they are not in line with the explanation offered by you, then the question will come whether AO will reject the claim that it is this year's income. And if the claim is rejected, then obviously AO will have to do the hard work, as I said earlier, of trying to prove which year it belongs to. Now, whether they will do that, whether they have the time, whether, because once they do that, then the whole recovery of the demand gets delayed, because by the time they reopen, send notice, scrutiny happens, it will take a couple of years, and maybe the government cannot afford to lose that time. They would rather have the revenue in hand. So whether they will do that or not is a moot question. 270A talks about misreporting of income. Cases of misreporting of income referred to in subsection 8, that is penalty which will be equal to 200% of the amount of tax payable on underreported income will be, so there are certain items listed down. First is misrepresentation or suppression of facts. Second is failure to record investments in the books of account. Third is claim of expenditure not substantiated by any evidence. In the context of what we are talking about, these three may not be very relevant, but the fourth item, item D, recording of any false entry in the books of account. This, according to me, is the dangerous one, which is what we need to be worried about and wary about. That if, for example, somebody records an entry in the cash book today and says that I have deposited 5 lakh rupees and this is out of my current year's income. Now, if it is proved by the AO that it is not current year's income, then it is resulting in recording of any false entry in the books of account. This could also lead to, because this is one of the items listed in 270A, which can result in levy of penalty for misreporting of income. And therefore, we need to be careful about it. And then, of course, failure to record any receipt in the books of account having a bearing on the total income, etc. These are things which may not be applicable, but recording of false entry in the books is something that we need to be careful about. Then there was a mention in the beginning about section 68 and section 115 BBE. So section 68 provides that if any sum is found credited in the books of account of the taxpayer and he either does not offer any explanation about the nature and source of that sum, or the explanation offered is not satisfactory. Now that satisfaction of the assessing officer, we all know in many cases what it means, but we are talking about the law, the legal satisfaction. So it's not satisfactory in the opinion of the AO, then that sum can be taxed as his income. So here we are talking about sums which are not offered to tax, and which the AO will try to bring under section 68. And then section 115 capital BBE can be applied with reference to the provisions of section 68 dealing with unexplained cash investment. That 115 BBE says that tax in this kind of a situation where there is unexplained income taxed under 68, in that case the income will be taxed at a flat rate of 30% plus surcharge and the education cesses, irrespective of which slab the SSC falls in. So then it becomes a maximum marginal rate of 30%, so 33 point whatever, 30 plus surcharge plus EC, and no deductions will be available from the income which is taxed. So this deemed income will first of all be taxed at the highest rate. Secondly, there is no, so it will be taxed on the gross basis, and thirdly, it will invite section 270A. So in case of scrutiny, if no satisfactory explanation is given by the SSC to the AO, then AO can treat the amount deposited in the bank as unexplained credit under section 68, levy tax at 30% under 115 BBE. He can also levy penalty at the rate of 200% of the tax, meaning another 60% under section 270A, and the power of prosecution has also been given. So therefore, this is a deadly provision, 68 115 BBE. It could be applied if the SSC has not offered it for tax. If the SSC has offered it for tax, I think to invoke 68 115 BBE and then 270A would be very difficult for the AO. There is no possibility, no legal possibility, and no legal requirement for any bank, any post office to report the details of the cash deposits, SSC-wise details, the depositor-wise details, PAN-wise details to the income tax authorities. They have time from 31st December to 31st January. So before that, there is no question of them giving all these details to the income tax authority as per law. And therefore, what we are seeing on WhatsApp, the notice, that Sikkim chap, the question that arises is that, is it true that the banks have already started getting the information, whether income tax department has already started getting the information from the banks? Also, some people were saying that, in that ITR income tax e-filing website, in that particular item which is there, which we feel is new, the banks will straight away start reporting. It's not like that. I don't think anybody's cash deposits have got reported over there. It doesn't happen so fast, because banks are anyway struggling with just collecting the cash. The question of reporting, I mean, they would have to work throughout the night to do the reporting if it was so required. So according to me, the notices whatever notices have already been issued, either they are fake and somebody has done Photoshop and sent it out, or if they are genuine notices, it must be a stray case. I don't think large scale, in Mumbai at least, we have not come across a single notice even. A lot of people are asking that, what do you advise? Should I have money, I want to deposit, should I deposit at one shot, at one time, or spread it over? That is one question. And secondly, I have 3 bank accounts, so should I go to different banks and deposit, distribute? So we had a panel discussion at the BCA Society on Friday where same question was asked. And my personal view is that if you have cash, it is there. Okay, it is with you. Best thing to do, according to me, would be to deposit it in one shot in one bank. The reason, I have a reason for that if I am the ITO and I get a case where there are 3 bank accounts, one bank account, Bank of Baroda, so-and-so, Malad West branch, one another XYZ bank, and third is ABC bank. Every bank, every 2-3 days, the SSC has gone and deposited 1 lakh. As an ITO, I will suspect that there is something wrong. That this fellow is, converting, thinking of how to